Today, I want to talk to you about 4 concepts that I've found are helpful in preparing you to access capital markets. First thing, have your books current. Being able to provide your financial reporting year to date and 3 years historical, no matter who you go to and what you're doing. That's the first thing people ask you. So your income statement shows how profitable you are. Your statement of cash flows shows that your business generates cash. And then your balance sheet shows how strong your assets over liabilities are. But typically our businesses, smaller businesses, minority businesses, have not been told the importance and significance of keeping up your financial statements. And so therefore, when they go to a financial institution, the things that they ask them for are tax returns, kind of in lieu of having those 3 financial statements that I mentioned. Without having the statement of cash flows, which shows that your business is cash flow positive, they just tend to start weeding you out. Second is really starting to build a relationship with your banker. Just having a bank account is not a banking relationship. If the banker doesn't know you, then you're really just one of thousands of depository accounts. Take some time and develop and cultivate a relationship with the banker, whether it's a wealth manager, private banker, commercial lending banker, just your branch manager. Third is thinking holistically about your assets, your investments, whether they're real estate, whether you have marketable securities. Does your business have stocks, bonds, a 401k? Those are all assets that you would see your company's balance sheet. Because after they ask you for your financial reporting, then the discussion will be, well, what would be my security, my collateral package, particularly in the African American community. People who've had excess cash have put their investments in money market CDs. However, they're just not earning as much. The fourth point is breaking the myth of I need to report a loss so that I don't have to pay taxes. That may solve one issue of reducing your tax consequence. However, when you're trying to access capital, it doesn't look like your business is healthy and profitable, which means you can't repay the loan or the investment. Your primary concern when you're in business is to always show profitability, even if it means that you will have some tax consequences. It is a lot easier to explain how you didn't make as much money as opposed to how you didn't make any money. I would say that these 4 nuggets and gems and concepts that we've discussed today are also relevant for being prepared to think about what's your strategy for your business. This has been more of a financial strategy of accessing capital, but it can also be useful in how you either want to exit or what fork in the road you want to go.